Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. I think we haven't been in such smiles in some time now. It was a very sharp short covering rally. Call it a day when the cat was away and so the mice were at play. China wasn't trading and it will not trade tomorrow as well. What's more important, the US will not trade on Monday. So it appears to be that the traders have decided, let's have some fun and games. For whatever reason, we did see a short covering rally in global commodity markets as well to some extent in a lot of the equity markets. And it was repeated with some exponential value in India. Commodities jumped 5-6% and were very closely followed by the banks. Bank Nifty rising 2%. As a result, you have practically all the indices, Sensex, Nifty, mid-caps, all of them rising by between 1.1 and 1.4%. The question is, of course, how long will the party last?
Well, I guess as long as the holiday lasts, Lata, perhaps, because global traders seem to be just taking a bit of a breather after what has been a brutal fall. But on that note, let's start with the headlines. Dalal Street manages a modest recovery thanks to supportive global cues. Benchmark indices gain 1.3% with the Nifty reclaiming the 7,800 level. The Sensex gains over 300 points. Capital goods, metals and bank stocks lead the gains with the Bank Nifty climbing 2%.
Brokerage opinion, power, big stocks. Ambuja Cements ends 4% higher as Nomura says a pickup in demand in the non-southern markets will benefit the company. Cain rallies 6% after CLSA advisors buying the stock. The brokerage says concerns on the Cain-Vedanta merger have been overdone.
Mid-caps underperformed blue chips slightly, with that index gaining 1%. Real estate stocks like HDIL, DB Realty and Indiabulls Real Estate rally anywhere between 4 to 7%. Ratnamani Metals, VA Tech Comback and Ujas Energy see brisk buying on healthy order wins. Jet Airways gains over 2% after the airline merges Jet Light with Cell.
Well, those were some of the headlines from the street, and here are the experts we have lined up on the show for you. Sanjeev Prasad of Kotak Institutional Equities and Nishchal Maheshwari of Edelweiss Securities join in with their take on markets and specific stocks and sectors. From the global arena, we'll tell you how Dr. Doom, Mark Faber, actually, he's the author of Boom, Gloom and Doom, is reading the cues from China. We'll also tell you what bankers like K.K. Mistry and Romesh Sopti have to say about the possible trends in rate cuts.
All right, so we'll get you all of that opinion and analysis. But first, the action. After 3 days of pain, some respite for bulls on Dalal Street. A rally across global markets and some short covering led to healthy gains. Anuj is now joining in with a wrap of the day's trading highlights. Anuj, finally some respite for the bulls?
Well, they say when cats are away, mice are at play. And today the Chinese market was not trading, so the global markets had to go through less volatility. And you saw the kind of surge that we saw in trade today. A lot of this was short covering because volumes were quite low in today's trade. There was some bargain buying as well, of course, in some names, but most of it was short covering. Banks led the pullback, which was quite heartening for the bulls, and commodities also supported the market. So let's talk about some of the stocks that led the market today. Just like on the way down, on the way up, the top contributor today was HDFC. That stock was up 4.5%. Axis Bank and Kotak Mahindra Bank gave it company, so big gains in all the financials today. Apart from that, commodities did well. So stocks like Tata Steel, Vedanta, Cain, you could add almost everything else, Hindalco, cement stocks, everything in the commodity pack did quite well in trade today. Some other prominent Nifty gainers today included Maruti, a stock which has corrected quite significantly over the last fortnight. That stock was up 3%. Larsen & Toubro was up 3% as well, and Asian Paints was up close to 2.5%. On the losing side, there were 3 or 4 losers actually today, not more than that. Idea was down about 3%, BPCL 1% and Bosch was down about 1%. The sector of the day today was real estate. That was really a sector in which there was a party on. DLF was up 10%, Indiabulls Real Estate up 7%, and HDIL was up about close to 5%. Some more non-index stocks from the broader market which looked quite interesting today. Stock of the day today probably was Tata Motors DVR, 7% higher on that stock. JSW Energy as well, up 7%. And yes, you're seeing that right. MTech Auto was down 35% after already having fallen about 70-75% recently. So that was the market action. A lot of short covering, a lot of bargain buying as well. But the key is that have the markets found a durable bottom? The answer to that we'll know maybe in 7 to 10 days' time.
Well, that point is taken, Anuj. The markets will watch very closely for the Friday evening non-farm payroll numbers from the United States, and that number can drive markets either ways depending on how the US markets respond. Of course, we will not have to worry about US markets on Monday. That's a trading holiday there. But just to add to what Anuj was pointing out, all the stocks that were under duress saw their biggest bounce up today. For instance, real estate stocks have been under duress and you saw them jump. Commodity stocks, a lot of the PSU banking stocks, they were the ones that jumped. But spare a thought for those that didn't jump today. Those were the guys who you would normally go to for refuge in a falling market. Look at the stocks: Idea Cellular, BPCL, Bosch, Sun Pharma, ITC, Infosys. These stocks ended in the red. Why? Because they have been the safe harbor all these days. And today, you could take a little bit of money off that and put it in the high-risk ones. But don't forget these on a day when the seas are stormy.
Absolutely, and we don't know how far away from those stormy seas we are actually, whether we're completely out of those troubled waters or not. On that note, it's time to get in some market opinion. Well, Sanjeev Prasad, Senior Executive Director and Co-Head Institutional Equities at Kotak Institutional Equities, believes that market valuations are looking quite good. He also says that it's the right time to buy select private sector banks.
You can't really time the bottom of the market, but when I look at valuations, they've become quite good in many of the good quality names. Look at the private banks, I think many of them are trading at pretty reasonable valuations. So it's probably time to look at some of those names more favorably. If you look at the numbers for the Nifty 50 index, I look at the slightly broader index over here. We're looking at before the start of the season 18% growth for the index. It has come down to about 12% as of now for the Nifty 50. So clearly there has been some cut in earning numbers. As far as the EPS numbers go for, let's say, Nifty 50, we have about 450 rupees EPS for March 16 year and about 540 for March 17 year. So there have been some cuts, but not a lot, I would say. So as far as the 2017 numbers are concerned, they are still, I would say, somewhat intact.
All right, and here's some information for you, CNBC watchers. We start with our special series, Wizards of Dalal Street, with Ramesh Damani shortly. He travels all the way to Haryana to catch up with Ashish Dhawan, the private equity investor and philanthropist and founder of Ashoka University. Ashish believes that the overall market is not frothy, but feels that FMCG and pharma stocks are ridiculously overvalued right now. Listen to a slice of that conversation. It will tempt you to listen to that whole show and want more of it.
Where did you find that growth in India in 2002-03? Cusp of a bull market. What did you sense that was happening in this country?
Yeah, so I was very, very bullish on financials because clearly it was a leverage play on the economy. You could see the economy coming out of a very, very rough investment cycle and low penetration, low market share for private banks. But a big one was NBFCs, which had just been obliterated through the late 90s. And we looked at the people who were left standing. Shriram Transport, Mahindra Finance, Bajaj Finance. We ended up investing in all of them. It was really a sector trade. Today, I don't think the overall market is frothy. I think there are certain sectors, FMCG and pharma, feel ridiculously overvalued right now. There are some mid-cap spaces where there's just been too sharp a run-up and the fundamentals just aren't there. In the capital goods sector, for instance, some companies have run up even though the business really hasn't changed that much fundamentally. Or the real estate sector is in the toilet, and at the same time, things that are derivative of the real estate sector, like building materials, seem to be doing very well.
Very well, yeah.
So those don't make sense to me. There's a dichotomy there.
All great investors are defined by one or two great picks they made. Jim Rogers by commodity, Soros by his currency bets, Buffett by his bet on Coke. What have been your fondest investment bets?
My fondest ones have been Shriram Transport, which was actually 4 different companies when we invested, and the promoter had agreed to merge it. Murky sector, lots of hair on it, and it really completely transformed.
Perspective that really spans decades. You don't want to miss that conversation. That entire interview plays out tomorrow at 6:30 p.m. only on CNBC TV 18. Well, moving on to action today. The biggest laggard in trade today was the Amtech auto share once again. The stock ended the day lower by almost 37%. Varinder Bansal is joining in with details. No end to the woes for this particular group or this specific stock, Varinder?
Well, thank you so much. Clearly, the stock of the day was MTech Auto, down nearly 37%. Remember, from that 52-week high of 266, the stock has corrected now nearly 85-86%. Mind you, this is not small because, you know, at the start of that 52-week high, the market cap was nearly 5,000 crore. From 5,000 crore, now it has come down to nearly 700 crores. So nearly 4,300 crores wiped off from MTech Auto since that 52-week high. We all know what the problem is going on with that cash stack bondholders, and we had pointed it again and again on CNBC TV 18. But if you just look at the NSE plus BSE traded volumes today, it was nearly 5 crore shares. Now, 5 crore shares is nearly 20% of shares outstanding, and that's a big trade which was happening on the stock today. Also importantly, if you just look at the futures open interest, it was up by nearly 25% on nearly 20 lakh shares. That was the kind of shorting which is happening in the futures market on the MTech Auto. You know, if you look at the shareholding pattern, you will understand that this is one company which is held by, FIs and DIs. So there's huge ownership issue as well in the stock. For Motor holding 49%, FI holding nearly 19%, and DI is holding nearly 16.5%. One thing which is different from other group companies, whether it's Metallist Forging, whether it's JMT Auto, Rolla Tenors and others, this is the only stock which is present in F&O. And if someone wants to sell, considering they just want to just move out of the stock, they can sell at any price point, and that is why we saw 35% fall in the stock, and other group companies were down 5%. But clearly this massive volume, which is nearly 20% of shares outstanding today, will be very important to watch out for. I'll be watching out for very carefully what are the bulk yield data which will be reported in the evening, and also the delivery statistics in the morning.
Yes, sir. We'll expect you to update us on all that tomorrow morning, Varinder. Well, now let's get in our big global voice of the day. The author of Gloom, Boom and Doom report, Mark Faber, has a slight warning for India investors. He believes that India would be mistaken if it feels it can remain secluded from the global slowdown that we are seeing.
It would be a mistake to assume that in an environment of global liquidity tightening, India would not be affected. It will also be affected. And it will also be affected from the Chinese economy, not because of its exports to China, but when the Chinese economy weakens, it weakens all the resource producers of the world, including Africa, the Middle East, Central Asia, Latin America, Australasia. And these countries, they buy also goods. And so when their economies go down, they buy less goods, including less goods from India.
All right, the fallout of a slowdown in China. Time for a break, but coming up on the other side, some perspective with Sudarshan Sukhani, who will be joining in for a technical chat. We'll also tell you about all the stocks that were buzzing around on the street today.